Good morning, ladies and gentlemen. Welcome on board to the enrichment session for Paper Advanced Financial Management. I am Joanne, the Manager of Learning Support for ACCA Malaysia. How is everyone doing? I hope you all are safe and in good health. Thank you so much for joining the session on a Saturday early morning with us. Okay, now I'm here welcoming our speaker today, Mr. Chow Kim Tai. Yes. He is an experienced lecturer from our goal-approved learning partner, Crescendo International College, that is in Johor. Now, he is a chartered accountant of Malaysia and also a fellow member of ACCA. He has over 29 years of teaching in financial management and also management accounting. Now, before I hand over the session to Mr. Chow, just let me quickly run through the housekeeping item with you. Yeah? Now, there is a chat box and raise hand function in the Zoom platform at the bottom, and we will be using that to communicate with everyone. So if you have any questions, to clarify during the presentation, you can either speak up, all right, by letting us know through clicking on the raise hand button, and we will allow you to talk, all right? Alternatively, if you prefer to chat, you can type the message in the chat box and select send to everyone. So Mr. Chow, will address your questions, whenever possible. Otherwise, you can actually save up your questions and ask towards the end. All right, okay, I think we should get started now. The time is 9:02 already. So over to you now, Mr. Chow.
Thank you, Joanne.
Thank you.
Okay, hi, good morning, students. Okay, welcome to this ACCA enrichment session, Advanced Financial Management, AFM, for this June exam. Okay, let me share my screen here first. Okay, now there will be 3 handouts that I will be using today. Yeah, so I think in a short while, Brian on the ACCA side will upload this handout to you all. So you can open it out and view, or you just view on my screen here. Okay, you should be able to see my screen now. Okay. All right, so Brian already started to download it. Okay, upload it. Yeah, so you can view that, or you can actually view on my screen here. Okay. Now, at the end of, this handout, if you look through it, there'll be a lot of empty space. So as I carry on my lecture, I will be writing on this handout. Don't worry, you don't have to copy, okay? You just focus on the lesson. At the end of the session, I will send this handout to ACCA, and ACCA will actually forward to all of you. All of you have already registered the session with ACCA, so ACCA will have your contact. Okay, so don't worry, you don't have to copy anything, you just focus on listening here. Okay, now, right, so let me start here. Right, okay. Okay, now first, just now Joey has already given an introduction to our college and also myself, yeah? So I won't go into a lot of detail of that, just very briefly. I'm currently the head of the ACCA department of Crescendo International College. Okay, you want to know more about us, you can read through this. I don't go into detail. We don't want to make this a marketing session. But anyway, we are in southern Malaysia. We are in the city of Johor Bahru. I hope all of you have been to JB before. It's a beautiful city, right? Just 1 kilometer away from Singapore. Although the last 2 years, although 1 kilometer, we cannot enter for the past 2 years, but now everything is back to normal. Okay, now we started hybrid online classes. Hybrid means we have face-to-face classes that students come to our college, and we also have online classes via Zoom ever since the pandemic start. Okay, so therefore, in this coming July intake, we also have hybrid classes. Okay, so after this session, you can go to our website. Okay, I have put down our contact here. You can call us, you can go to our website. If you feel like you like our courses, you can register with us and your classes will be run on online basis. You will go to the Zoom live session if you're outside JB. If you are in JB, of course, you can join us physically. At the same time, all our lessons will be recorded and we'll provide you with the videos after the lesson. So you can join the live class, and after the live class, you can actually view our video as well as a backup. Okay. We have quite a big portion of students coming from Singapore because of their currency advantage. Okay. One subject ACCA Malaysia is about 1,000 ringgit. In Singapore, it's also about 1,000, but it's Singapore dollar. So now it's 3.2 ringgit to a dollar. So we do have a lot of Singapore students joining us online basis. Yeah, so they pay Malaysia price, but getting the same subject. Yeah? Our lecturers team, like myself, I'm teaching in Singapore and Malaysia. Okay, a lot of our lecturers team are both teaching in Singapore and Malaysia. So sometimes we joke with our students, we say, you get Singapore lecturer, but you pay Malaysia price. But don't get me wrong, I don't say that Malaysia lecturers are not good. Malaysia lecturers are equally good. We are all ACCA qualified. Just that because of the currency difference, it seems to have an advantage. Right? So that's a little bit on the school here. About myself, I think Joanne has introduced to you all, so I don't have to say much about that. Okay, let's go straight to our subject. Okay. As we go through the class, if you have any question you want to ask, two choices you have. You can put into the chat room, and occasionally I will take a look at the chat room, or you can raise your hand, then we will unmute you and you can ask questions. Yeah, so we go it this way. Okay. All right. We will not allow all participants to on the mic all at the same time, because then there will be a lot of interference. Then nobody can hear anybody. Yeah. So you would raise your hand, then we will unmute you. Okay. All right. So advanced financial management. Okay. The planning for this session first. We have 3.5 hours until 12:30. In between, we'll have 10 minutes break. Okay. So first, we will do a debrief of the mock exam. That I think not all of you have done that, but I think maybe half of you here who have taken the mock exam and you have got your result. Unfortunately, I must say many of you are not prepared for the mock exam. Okay, so anyway, we'll do a debrief here. So we'll go through the mock exam paper first. They'll probably take 1.5 hours. Yeah. Then we'll give you a short break. Okay. After that, I will brief you on the changes to the strategic options paper AFM from September 2022 exam onwards. I will brief you on the changes, because of course you are into this session for the June exam, but not everyone will go for the June exam. Agree? Some may go for a September exam. Yeah, or unfortunately, some touch wood, you are not successful, you may want to go for a September exam also. So we will spend the second half session briefing you on the changes from September exam. And then after that, if we have extra time, I will do a little bit on currency. You can see towards the second half of this notes here, I have something on currency. Depend on how much time we have, we'll try to do a bit on currency until 12:30 p.m. I may not be able to do everything in such a short time, but whatever we can do, we do. Yeah. Okay. Now, right. So that will be my plan for today here. Okay. So first, the structure of your AFM exam, you should be familiar now. Yeah. You will have section A, a case study, 50 marks question. And that is where your mock exam is all about. That some of you have done that. Yeah? Then you will have 2 questions in section B, each one 25 marks. So altogether, you will need to answer 3 questions in the exam. Yeah? And I say 3 questions. Don't just do 2. If you just do 2, the chances is you will not get through. It's very difficult to get 50 marks out of 75 marks. Yeah, so you must do 3. Okay. Now later on, I will give you a suggestion how to approach your exam, which question to start first. Later on, I will let you know. Yeah, but you must answer 3 questions. These 3 questions come from where? Okay. These 3 questions come from, okay, right. Sometimes students attend this type of session because they just want the tips. Okay, you want tips, we give you tips, but please take tips with a little bit of skepticism. Okay, tips remain tips, they are not accurate. I'm not fortune teller. Okay, but we do it based on analysis of past exam. Okay, now, but if you look at the AFM exam throughout the years, the last 10 years or so, you will realize that these are the 3 areas that they test you. Mergers takeover, the mock exam I set on merger takeover. Yeah, so mergers takeover. Okay, your mock exam paper is basically set by me. So mergers takeover, you have 1 question. Risk management, either interest rate risk or currency risk, you will get 1 question. Normally, they won't ask you 2 at the same time. They will only ask you either one. So interest rate risk or currency risk. Yeah, and there will be a question on investment appraisal, NPV or APV. They will ask you either one, NPV or APV. Yeah, so if you look at your past exam, 3 questions, the 3 questions will come from these 3 areas. All right. Okay. Now, fine. So with that mentioned, okay, what you get in the exam paper, formula sheets, you should be familiar with this: present value table, annuity table, and the standard normal distribution table. All this you should be familiar. Yeah. Okay. Up to the June exam, you will get these 3. September exam, you will not get normal distribution table anymore. I will tell you why in the second session. Yeah, when we talk about September exam. Okay, so June, you will still get these 3 tables, right? Now, okay, so good. That's a bit of introduction here. So let me now start with our mock exam debrief. Okay, so the mock exam question I set on mergers takeover. So before I go to the question, let me first give you a summary, a checklist on what you must know for this topic, mergers takeover. I give you a checklist first. Yeah. Okay. Now, all right. I'm going to write on this handout. So what I will do is I will now put down my tablet into a stand. Okay. So the stand is 45 degrees, so you may not see me fully, but it doesn't matter. As long as you can see my computer screen, that would be good. Yeah, you don't have to see my face. Okay. Okay. Because I put it down, then I can write better. If the computer is standing, my handwriting will be very ugly. So I put it in a comfortable way to write. Okay. Now, so first, let me give you a checklist. So the mock exam question I set on this area, mergers takeover. And it's one area that you will sure get question in the exam. Okay, so what you must know for this topic so that you can answer question comfortably. Okay, company A take over company B. Company A take over company B. Again, don't worry about copying. Yeah, I will send you all these notes at the end of the session. Yeah, I will send you all this. Okay. Company A is the bidder company. Company B is the target company. All right. Okay. Now, so when company A take over company B, okay, we want to do an evaluation whether A should buy over B. Your question will give you this takeover scenario. One company buy another company, and you ask to do an evaluation. So to evaluate this takeover, should A buy B, you will need to value company. You will need to value normally to the target company. Yeah, you will need to value the target company, and you will need to value the combined company after the takeover. Right? So to evaluate, you will need to do business valuation. And there are 4 methods of business valuation that you must know: the net asset method, earnings model, dividend model, and the free cash flow model. Yeah. Okay. Now, so I briefly, very quickly run through this for it. The net assets method says the equity value on the net asset is the total asset minus total liability. Okay. Okay, this is a simple one, not common in AFM because this is very basic, not common. You normally don't see question on this. Okay, so that's the first one. Earnings model is popular. Earnings model is popular, simple model but popular. Yeah. Okay, earnings model says share price is the PE ratios multiplied by the earnings per share. Earnings model. Okay. Okay. A small example here. Right. Let's say company A PE ratio is 8 times. Okay. Company B PE ratios is say 5 times. Then I have earnings or profit after tax. Company A is $10 million. Company B is $6 million. Yeah. Now, I want to do a valuation of the combined company. After A and B combine, what is the value? Yeah. So if I want to value the combined company, then I will need to work out the combined company PE ratio. Correct? So I must take this PE and this PE combined. Yeah, the combined company PE ratio. All right. Now, how? The combined company PE ratios is the weighted average of individual PE ratios. Okay, for those who just joined, just repeat what I said just now. Don't worry about copying these notes. Yeah, we will send it all to you after the session. Okay, so just focus on listening. Okay, so we take a weighted average like this. A is 8 times plus B is 5 times. Okay, B is 5 times. Right. The weighting factor will be the earnings of each company. The weighting factor, we use earnings. Earnings is profit after tax. Yeah, the profit after tax. Okay, so 10 million for A and 6 million for B. Total 10 plus 6 is 16. That is the combined company PE ratio. Yeah, okay. That will give me 6.875 combined company PE ratio. And the combined company earnings is company A earnings plus company B earnings, yeah, earnings or profit after tax. Company A profit after tax, company B profit after tax plus the synergy. Yeah, so if the question asks you, they will give you information on the synergy. You just add in. All right. Okay, so that is earnings model. Yeah. Okay. Dividend model, the share price dividend model is this one. Okay. Right, I'm sure you have gone through this in your study. Okay. The free cash flow model, this is very important. Now, if you look at your AFM past exam, you will realize almost every exam, they test you on free cash flow. You cannot avoid this. They test you every exam. Yeah. So my mock exam is actually set on earnings model and also free cash flow model. These are the two most important ones. Yeah. Okay. Free cash flow model or discounted cash flow, there are actually two versions. The free cash flow to the firm, FCFF, and the free cash flow to equity, FCFE. At this time, you should know that there are two versions. Yeah. Okay. Now, you must know very clearly what are the difference between these two. Okay. You must know very clearly. The free cash flow to the firm is the cash flow attributable to the shareholders and debt holder. The cash flow belonging to the shareholders and debt holder. The free cash flow to equity is the cash flow belonging to the shareholders only. That is the first difference. Yeah. Okay. Now, how to work out the free cash flow? These are the format, or you can say the formula. Yeah. Okay. You need to remember this. Okay. But first, understand how we derive this, because once you understand, you can remember forever. If you blind memorizing, you will forget. Yeah? You must understand. If you understand, you remember forever. Okay. How we derive this? This value comes from the income statement. Okay. The income statement, we all know, operating profit, PBIT, we minus interest, we get profit before tax. We minus tax, we get profit after tax. We minus dividend. Am I right? Income statement. So we start from PBIT, both sides. Yeah. Now, interest. Interest is the cash flow to the debt holder. Agree? Interest belongs to the debt holder. So you see, we don't minus interest here. It belongs to debt holder. This side, shareholder only. Interest do not belongs to the shareholder. That's why we minus, see? So that is the second difference between the two. We minus interest here, right? Next, okay. Tax you pay the government. So tax is cash flow to the government. So both sides you must minus tax. Yeah? Okay. Dividend belongs to the shareholder. So both sides we don't minus dividend, see? We don't minus dividend. That is the logic, yeah? So from the income statement, we get this. Okay? Now, then, when we derive at this PBIT, we already deduct depreciation. We all know depreciation is not a cash flow. So there's no money go out from the company. The money is still in the company. That's why we add back depreciation. Both sides. Yeah? Okay. So this is from the income statement. Income statement just show the revenue item. Then we have capital item, the capital expenditure, the working capital. So these are the capital item. See? That's the logic. Yeah? So once you understand the logic, then you remember, you can remember. Yeah? Okay. All right. So that's how we derive at free cash flow, must know. Now, the free cash flow to equity. This free cash flow to equity is also referred as dividend capacity. Sometimes question use this term, yeah? They say compute dividend capacity. It means you must find free cash flow to equity. Remember this word, yeah? Dividend capacity. Okay. Once we got the free cash flow, we can now do valuation. Yeah? Yeah. Valuation, we use perpetual annuity because a company life is forever. So therefore, we use perpetual annuity. Yeah? A company life is forever. Okay, now over this side, the value of the firm now is the free cash flow to the firm now, 1 plus the growth rate divided by WACC minus growth rate. Over this side is the free cash flow to equity now, 1 plus the growth rate divided by cost of equity minus growth rate. The discount rate is different. The discount rate is different. That is the third difference. Yeah. And the last difference is, okay, you get a value here, you get a value here. Yeah. Now, when you use FCFF, the value derived here is the company value, which includes shareholders and debt holder. If we want to find equity value, we will need to minus the debt value now. Yeah. Okay, I will write in the mock exam that you submit. A lot of you do not know this. Yeah. Okay, you minus the debt value now to derive at equity value. Okay, that is equity value. But if you use free cash flow to equity, this is equity value directly. This is shareholder. So the fourth difference is here. See, there are clear difference between these two. Right? So if we summarize the difference, the first difference is here, number one. Okay. The second difference is here. The third difference is the discount rate. The fourth difference is here. Okay, must be very clear. You cannot mix up these two methods, right? Okay. Now, then come one question that students always ask. In the exam, which method do I use? So you want to know, in the exam, which method do I use? Now, there's no such thing as which method is better. They are both possible. So the exam question will definitely tell you. Okay? Exam question will definitely tell you which one to use. You just follow what the question says. So which method to use in the exam? You look at the question will tell you. Okay? Right, good. So that is a brief checklist on the technical area you must know for merger takeover. Right? Okay, so now I'm going to go into your mock exam. Okay? I'm going to go into your mock exam. All right. I expect we will spend about 1.5 hours to go through this mock exam. Yeah, the time for a mock exam question 1 is 1.5 hours. You need 1.5 hours. Okay. All right. Some of you have done this mock paper. They submitted to me. I've marked it. Beside me, we have actually another marking team. I cannot mark everything myself. There's too many. So we have other marking teams. So not all of you are marked by me. Some are marked by me. Okay. Otherwise, the volume of marking is a lot. Right. Now. Okay. Now, what you can see here is you have 2 full pages. Yeah. The length of your question 1 is about this length. It's about this length. Yeah. Okay. This question standard is equivalent to your actual exam, right? So if you pass this, you should be okay in actual exam. Unfortunately, I think many of you are not prepared for this mock exam, so you're going to put in more effort. Okay, so let's go through the scenario first. Okay, because not everyone have gone through the mock exam. Let's go through the scenario together. Okay, for those who have done the mock exam, you just bear with us few minutes here. Trans-Pacific Air, TAC, company is a reputable budget airline company operating in the Asia-Pacific region. The company was formed in the late 1990s. Jimmy Teo, the CEO of the company, bought over the loss-making airline from a government-linked organization for $2 and mortgaged his own residential property for working capital to fund the operation. TAC had managed to turn around the airline in just 2 years and has been expanding rapidly in the last 2 decades, winning various prizes and awards in the aviation industry. At the dawn of 2020, COVID-19 pandemic hit the world, resulting in unprecedented worldwide lockdowns and countries closing international borders. This has adversely affecting the aviation industry, with many airline companies suffering serious financial difficulties, with some having to close down. TAC is of no exception. So this question I set very much in the current environment. Okay, your professional syllabus says you must be aware of current issue all the time. Okay, so current environment. Okay. Although TAC still has sufficiently large cash reserve accumulated from its pre-pandemic profitable operation, Jimmy realized that it would not survive if the company continued to operate without any breakthrough strategic change in the business, has been suffering significant losses over the last 2 years, with a significant rise in the level of debt financing. So the company is in trouble now because of COVID. Yeah, so that's very much current environment. Jimmy is therefore considering diversifying the business to reduce reliance on its core business. It plans to offer delivery and runner services for food and grocery deliveries, as well as offering ad hoc services to individuals or businesses for various tasks, such as paying bills and accompanying patients to seek medical treatment. Okay, delivery service. So you straight away you can imagine Grab, Food Panda, right now? Okay, that kind of business. Yeah. Okay, so you can think of the actual environment, right? Now, so Grab, Food Panda, yeah. Now, the service can be offered via mobile phone application. Jimmy considers taking over an existing established business offering these services as the best way to diversify, since it does not have any prior experience. So this question is about takeover. However, some other board members prefer organic growth, wanting TAC to venture into the business by setting up new company. Okay, eThunder. eThunder company is established company in delivery and runner service sector, matching the type of venture TAC is considering to diversify. So now it become obvious, yeah? Okay. That would be the bidder company. eThunder will be the target company. Okay. The service is provided by human riders as well as automated drone delivery. As the business has expanded tremendously during the pandemic, the owners of eThunder see opportunity to sell their business for a handsome capital gain. The owners consider a premium of 50% over existing equity market value of eThunder to be a reasonable price to sell their company. eThunder has two main divisions, providing delivery and runner service and manufacturing and selling drone. The latest financial statement of eThunder, revenue, PBIT, equity, ordinary share, yeah? Okay, now at this level, I think there should be no problem. 1 unit share is 50 cents. So $1, there are 2 units, right? Nominal value 50 cents. Yeah? So $1, there are 2 units. Therefore, the number of shares will be 10 million. 10 million. Yeah. Okay. Non-current liability, 7% bank loan. Delivery and runner service account for 60% of its latest revenue and PBIT. eThunder current share price is 120 per share. Okay. Now, for those who have done the mock exam, I realize that many of you missed out this point. That caused your answer to lose a lot of marks. eThunder has 2 divisions. One division, delivery and runner service. Another division is selling drones. There are actually 2 divisions, not just one. Okay. Combined company valuation and performance. Jimmy has no intention to venture into drone manufacturing, as he believes manufacturing drones requires specialized technology and skills that TAC will not be able to master effectively. TAC has found another company willing to buy the drone business at an agreed price of $15 million. After it has acquired eThunder. Yeah. Okay. As you read the question, you need to highlight on main point, but otherwise you forget. It's such a long question. Now you know your computer screen, there's this highlighter, right? Yeah, your computer screen has highlighted, use it. You don't highlight after you read 2 pages, you definitely forget everything. Then when you do answer, you miss point. Yeah, so important point you must highlight. Okay, this exam techniques. Yeah, okay. So now, okay, the point that many of you miss in the mock exam. eThunder has 2 divisions. This first division, this one you will merge to tech. The second division, manufacturing, selling drum, this one you will sell off. See, you don't merge the whole eThunder, you only merge one division. So many of you miss that, causing you to lose a lot of marks. Yeah, okay. Now, all right, continue. Okay. That estimates that the delivery and runner service business of eThunder will continue to grow after the takeover, with its revenue growing at the rate of 10% per year for the first 4 years after takeover, before stabilizing. At the growth rate of 4% per year to perpetuity. There are 2 growth rate, 2 stages. The first 4 years, after 4 years. This is very common in your AFM exam. So I set question in that perspective, very similar. The operating profit margin is expected to be 22% per year. This is better than the current performance due to the cost-based synergy expected from the combination of eThunder with tech. The tax allowable depreciation is expected to be equivalent to the capital investment needed to maintain current operation. Now, if you have done sufficient of your past exam, you will realize a lot of questions will have this statement. Yeah, my student definitely, you know, I know that my student who joined in this session as well. So you all will definitely know this already. Okay, so you will see this statement very common. You must know what it means and how to adjust. Yeah, very common. Okay. However, that estimate that it will need an investment of 40 cents per dollar increase in sales of eThunder delivery and runner service business after takeover. It is agreed that valuation of delivery and runner service business should be done using the free cash flow to the firm method, FCFF. See, they will definitely tell you which method to use. FCFF or FCFE, they will definitely tell you. Yeah. Okay. With the combined company WACC used as the discount rate, that current share price is 50 cents per share with 100 million shares in issue. The finance director of that is of the view that the company's current fair value should be much higher than the current equity market value, as the aviation industry is expected to recover soon, since many countries has opened their border, with COVID-19 entering the pandemic and the mid-phase. The finance director believes that the reasonable fair value of that should be based on 70% of its pre-pandemic level earnings of 25 million and 80% of the aviation industry average PE ratios of 10 times before the pandemic. The announcement of the takeover has increased share price of that by 30%. Yep. See, as you read through the case, you see a lot of information. All this information need to be used in your answer. You cannot have an answer at this level that don't use information from a question. You will not get good marks. Yeah? In all your analysis, your report writing, information from the question you must pick up. I will mention that as we go in later on. Okay. So all this information you should highlight, then you don't forget. You won't forget to use them. Yeah? Combined company weighted average cost of capital. It is agreed that the WACC of combined company should be based on the betas of Tech and E-Thunder. The current equity beta of Tech is 2.1. Okay, this is beta equity. Tech has $300 million of irredeemable bonds in the statement of financial position, currently valued at 92 per 100 nominal. E-Thunder asset beta for the delivery and runner service business is 0.75. Okay, this is asset beta. Yeah, so 0.75. This is beta asset for the delivery service. Okay. The asset beta of combined company should be the weighted average of asset beta of individual company, weighted by the market value of equity of each company. This sentence also you see all the time. You must know what to do. Yeah. Okay. For those that submitted your mock, I see 90% of you, you do not know how to calculate combined company WACC. You don't know how to adjust the beta. I can see in almost 90% of the answer. So you learn from today. You learn from today. Okay. The pre-tax cost of debt of the combined company is 8%. This is KD, cost of debt. Tech maintain its existing capital structure after the takeover. Okay, capital structure does not change. Both companies pay tax at 22% per annum in the year the tax liability arises. The risk-free rate is 3%, risk-free, and the equity risk premium is 6%. Risk premium is market return minus risk-free. I hope you know that. Yeah, risk premium is market return minus risk-free. Real option. Jimmy has attended a seminar on share options and how option can be used to value risky startup technology business. Jimmy feels that delivery and runner service business can be regarded as a risky startup business, as referred to in the seminar, and wishes to gain more knowledge on this. All right. So that is the 50 marks question. Okay, now we're going to start with the answer. Okay. Now, part A. Now, your 50 marks question is always structured in this manner. The question will start with part A, about 6 marks to 8 marks of general theory. This is something you read, you can earn the 6 to 8 marks. Easy mark for you to correct general theory. Always is start with this part A. Then part B will be the main part that you need to do report writing. And you have 4 marks, professional marks. I will teach you today how to earn this format. In the answer that I marked, 95% of the students do not get the format. What a waste. You know what to do, you can get the format, but 95% don't have that. It is really a waste. So I will tell you what to do now. Make sure you know. Okay, you must earn this format, right? And then it will normally follow by a part C. Okay, part C will be something that to test more advanced students. The better student will get marks for part C. That will probably differentiate the prize winner and the non-prize winner. So it's always structured like this. So I can say a well-prepared student should be able to do A and B. A well-prepared student. Okay. Right. Let's start. Okay. Professional marks, 4 marks for June 22 exam. When you go to September exam, it becomes 20 marks in total. 10 marks for question 1. Okay. The second session, I will tell you about changes in the September exam. The second session. Okay. So let's focus on the June exam first. All right. So we start from part A. Critically discuss the advantages and disadvantages of organic growth over acquisition for tech company. Okay, Advantages and disadvantages of organic growth over acquisition. Now, in your study, you must have already go through these two. Organic growth means you start new branch. You start from scratch. So your company open up another new branch. Say you are a company in Kuala Lumpur. You open up a branch in Johor Bahru. That's you open up new. You start from scratch. Acquisition is buy over another company. Okay, buy another company. So this is something that you must read. If you have read through your books, your notes, you will have the answer already. Okay, so this is general theory. Okay, so I've put in the answer here. Yeah. Now, okay, I think there are still students joining in from time to time. Okay, so for those who just join in, don't worry about copying the answer. At the end of the session, I will send everything to ACCA. ACCA will forward to you all. Okay, so there's no need to worry about copying. All right. Okay, now advantages of organic growth over acquisition. Advantages of acquisition over organic growth. This is the first question, right? Okay. Now, how many marks here? 8 marks. Okay. For your AFM level exam, take note of this class. For your AFM level exam, generally, 1 point with explanation is 1 mark. This is the guide that you can take. 1 point with explanation is 1 mark. Now, if you just put down the point, I see some of your answer. You just put down point number 1, you put 2, 3 words. Yeah, if you just put 2, 3 words, you are not going to get mark. It will be 0. You have to explain like how I do here. Explain in full sentences. Yeah, don't just put 2, 3 words. 2, 3 words will earn you 0 mark at professional level. It have to be explained clearly in full sentences. Yeah, so generally 1.1 mark. So if 8 marks question, this is 8 marks question, right? 8 points. Sometimes they give you 2 marks. If your explanation is very good, they might give you 2 marks for 1 point. But generally 1.1 mark. Take note of that. Yeah. Okay. So the answer I will give this to you. So we don't have to go through one by one to save time. I just briefly mention here. Okay. Now, advantage of organic growth. It is generally cheaper to start a business from scratch. Because you buy another company, you will have to pay premium to the original owner. You start from scratch, you don't have to pay premium. So this is 1 point. See, explain. Yeah. So you don't just put like this. Some of you just do that. You put number 1, cheaper to start new. Full stop. You know, your answer is number 1, cheaper to start new. 4 words only. You get 0 mark. Cannot. You must explain in full sentences, like what I do here. Yeah? Okay. Okay. Number 2, since all employees are newly employed, there's no problem, no culture problem. Okay. If you buy over another company, the employees are existing employee in the company. If you buy over them, you adapt new style, new culture, they will reject. Yeah, so there will be no new culture problem. So you explain. Yeah, again, don't just put there number 2, new culture problem. You just put 3 words, new culture problem. You get 0 mark. You must explain. Yeah, okay. I don't have to go through all this. I've given you the answer. Yeah, okay. I've given you the answer. 1 point to take note. You see, as I explain the answer, I will bring in tag. See, I will bring in tag. I will bring the scenario into the answer because the question says what? For that company. Now I see many of your answer. Okay, your answer advantages, disadvantages. You just put down general answer from textbook. You have memorized your answer in the textbook, you just put it down. You don't mention anything at all in your answer about that. Okay, now, I will not give you full 8 marks. because you are not referring to the scenario. See, you are actually the accountant of the company. You are explaining to your board of directors. You cannot talk about general, you must talk about your company. Yeah, so you must bring in the company. Understand? If you don't mention tech in your answer, I will not give you 8 marks. Yeah, okay. Now, I think there's a Q&A here. Let's see. Okay. All right. Okay, from our friend here, Akmal. How to avoid over or underwriting the answer to match the marks given. Okay, all right. Okay, now the guide to you is this. As I say here, the guide is 1 point with explanation, 1 mark. So 8 marks, you give 8 points with explanation. So your explanation will be 2 lines or 3 lines, like what I do here. See, 2 lines, 3 lines, good enough. Don't need too long. Too long, you are wasting time. Yeah, but you cannot have just 2, 3 words answer. So each point, 2 lines like that. Each point, 2 lines like that. That will be very good. Yeah, each point about 2, 3 lines. Okay, and remember your answer must bring in your company. Must talk about your company. You cannot give general textbook answer. Okay, okay. I hope I answer your question here. Okay, right. Okay, I will close this now. Okay, I want to explain these 2 things here in my answer. Okay, I want to explain this. In case you go through it, you don't know what is the meaning. Okay. Point number 3. Growing organically can prevent the bidder company from problems arising during takeover bid, such as defense tactics, golden parachute, poison pills. Yeah. Now, what it means is this. Okay. Now, suppose, let's say I am Singapore Airlines. Okay, I'm Singapore Airlines. I want to buy another airline. Now, a lot of airline is very cheap for sales. So say Singapore Airlines want to buy AirAsia. Example, Singapore Airlines want to buy AirAsia. Now, the senior employees, the directors of AirAsia will obviously, they want to prevent the takeover because they know after the takeover, they will be out of job. When I buy over the company, the first thing I'll do is I will change all the board of director people. I put in my people in the board. So those very senior employees will definitely lose their job. So they want to prevent this takeover. So how to prevent? They will come up with some defense tactics so that you won't buy my company anymore. The directors will come up with some defense tactics. Yeah. Okay. What defense tactics? Golden parachute. One example. What is golden parachute? That is to build in. To build in excessive compensation. To build in excessive compensation to the directors in the event of takeover. Okay, like for example, okay, if Singapore Airlines successfully buy over AirAsia, you must compensate AirAsia directors with 10 million ringgit compensation. Very, very high amount. Yeah, so that will prevent Singapore Airlines from buying because they know they buy, I must pay so much of money to the director. Yeah, so that's called golden parachute. Okay, that's one. Understand? Okay. If you buy over another company, you must compensate the target company director with some very huge amount before you can sack them. So you find that it's not worth anymore. Or poison pill. What is poison pill? Poison pill is intentionally underperform during the takeover negotiation time. During the takeover negotiation. Okay. So I know someone is going to buy my company. So in the process that they are still negotiating, I try to underperform. I purposely don't perform so good. I want to suffer loss so that my company don't do attractive anymore. If I'm not attractive, you won't buy me because I don't want you to buy. As a director, I don't want you to buy because I know I will lose my job. So I intentionally underperform. So it's like I take poison. I underperform, so my company don't look attractive anymore. Okay? For a short period of time, you cannot take poison forever. You take poison too long, you actually die. Just a short period of time. Okay? Okay. Right. Okay? These two words. Okay, that is part A. The rest I left it to you to read. Now, I want to focus on part B. Okay? Now, part B, let's look at part B. The main part of the answer is B. Prepare a report to the board of directors of TED focusing on the following. Number one, calculate the current value of TED company based on the finance director's suggestion. 3 marks. Calculate the weighted average cost of capital for the combined company. This is where I see many of your answer, you don't know how to do this. So I hope you learn from here. Okay. Number 3, calculate the value attributable to TED from acquiring eThunder and the sales of the drum manufacturing division. Number 4, evaluate the takeover of eThunder by TED. In the evaluation, discuss the assumptions or limitation of the valuation method used and provide justification of the valuation basis proposed by the finance director. Okay, that is the question. Professional marks for the format, structure, presentation, 4 marks. Okay, I'm going to start talking about this professional mark. Okay, make sure you earn this 4 mark. Yeah, I mark your answer. I see. If I can remember, only 1 or 2 students I give 4 marks. Okay, this is really a waste because you can earn the 4 mark easily. I tell you what you must do now. You follow this carefully. Okay. Number 1, format. Format is this. Some of you don't have this. To, from, date, title. To who, the question will say. To the board of directors. Follow what the question say. Yeah? Okay. To the board of directors. From who? From yourself. You are the one writing the report. Who are you? Okay, sometimes the question will give you your position, then you just follow the question. If they don't give, you create your own position. Finance director, financial controller, you create, yeah? But when you create, be careful class, you all know management pyramid, 3 level, right? The top level is strategic level, yes? The board of directors, the finance director, the reporting must come from the top level, the director, because you are at strategic professional. All the decision here, buy over a company, start a new project, those decisions cannot be made by a middle level manager. It must be the top level. It's very strategic decision. That's why you are in strategic professional. All right. So we want to see strategic professional. Okay. Now, date, you just put down your exam date. The day you go for exam, you will never get it wrong. You don't create your own date. You just put down the date you go for exam. You will never get it wrong. All right. Just a small title. Yeah. Okay. That is format. Yeah. Now, towards the end of the report, okay, if you want, you sign off. Yeah. Okay. But basically, that is format. Now, 1 mark for format. Easy 1 mark, but so many students don't have it, so I cannot give you the 1 mark. Number 1. Number 2, structure. Structure, you get 1 mark. Okay. What is structure? Okay. First, your report must have an introduction paragraph. Okay. Your report must have an introduction paragraph. Your examiners state very clearly in the ACCA global website. If they read through it, yeah, he said very clearly. But many students don't read the website. Okay. Okay. Your introduction paragraph must summarize what is in the whole report. What are the content of your whole report? The content of the whole report is basically what they ask you. So you must put down all this, what they ask you. Yeah, okay. So the report, okay, value the takeover, put down the limitation, justify the valuation basis. Whatever they ask you must be inside there. So we see here, okay. This report evaluates the takeover of E-Thunder by our company. The free cash flow and earnings valuation model will be used. See? Justification made on the revaluation done on our company. Revalue tag, they ask, right? Together with discussion of limitation which could affect the reliability of our valuation. Finally, an explanation of real option valuation approach. Real option, see, these are all being asked in the question, right? Yeah. So if you ask me how long, I would say 3 lines or so. 3 lines to 4 lines, about that, 3 to 4 lines. Yeah, not exact, approximately. Yeah, 3 to 4 lines. Okay. Now, don't just give 1 line. Some of your answer, I see this. You say, dear sir, below is the report on the takeover of E-Thunder, full stop. No, that is not what your examiner wants. You do it just 1 line like that, you don't get the structure marks. You must do like this. Okay, what is the content of the whole report? Okay, the report is pure writing. See, I don't have calculation in my report. All the calculation go to appendices. The board of directors don't want to see a lot of figure. He get confused. He cannot understand figure. You understand because you are accountant. Your board of directors just want to see your explanation. So you must spread out report and appendix. Figure go to appendix. Report only writing. Some of you mix out 2 together. So that is structure mark, right? And because you are taking computer-based exam, remember this class, I see mistake. Report must be word process. The appendix, you must use spreadsheet. Now, please don't do your report in spreadsheet. I see in some of your mock answer, no. The report you cannot do in spreadsheet. You will lose your professional marks. Report must be word process. Okay. Report word process. Appendix, spreadsheet. Remember that. Okay, that is structure. Now, then presentation. Presentation 2 marks. Okay. Some students I give 2 marks, most students I give 0. Actually, most students I give 0, to be honest. I tell you why. Now, okay. Presentation. Your report must have subheading. You see, business report. You are working people, you all have real business report. There's always a lot of subheading. Evaluation of takeover. Revalue tag, see? Assumption limitation. Do you have that? That's presentation. You must have subheading. Okay? Your report must be broken out into small paragraph like this, small paragraph. Some of your answer from the first line to the last line is 1 paragraph. That's no presentation. Must have subheading, must be broken down into small paragraph. Your appendix need to be properly presented like this, with proper table. Don't have your answer everywhere. Proper presentation. Nicely put down in table and all that. We want to see that. Now, you see also my answer here. Can you see that? Clearly cross-reference your answer. This help your marker. Okay, because your answer that is presented to us for marking, your work process is separate, your spreadsheet is separate. So if you don't cross-reference, sometimes the marker have problem trying to match which part is which part. So make sure your answer is clearly labeled which part. That will help the marker. You help the marker help you. Yes? Awak tolong saya tolong awak. Right now, yeah. So you must help your art marker to identify your answer. Okay. Now, all right. Okay. Okay. Now, so that is presentation. Okay. All right. Okay. Now we go into the detail. Okay. In order to write the report, we must start putting down the appendix first. We need the answer first, so we start. Yeah. Okay. Question number 1. Shall we? Question number 1. Calculate the current value of debt based on the finance director's suggestion. The current value of debt, this one. This one. Okay. This one, yeah. Now, the finance director believes the reasonable fair value for debt should be based on 70% of its pre-pandemic level earnings, 80% of the aviation industry average PE ratio of 10 times. Now, when you see PE ratio mentioned, you know straight away earnings model. This is a common one. Yeah? When you see PE ratio, you know it's earnings model. So it's this one, right? Okay. So B number 1, see, you label it clearly. Yeah, revaluation of debt, label clearly. Okay. Share price is PE ratio, multiplied by EPS. Okay, that's earnings model. Right? I will send the answer to you. Don't worry about copying. Okay. All right. Now, then we say here, okay. That earnings, that revised earnings should be based on 70% of its pre-pandemic level of 25 million, correct? 70% of its pre-pandemic level of 25 million. That will give 17.5 million, am I right? Okay, the revised PE ratios. The revised PE ratios is 80%, okay? 80% of the industry PE of 10 times. That will be 8 times, correct? Yeah, that's what mentioned in the question here. Yeah, okay. See this one, right? So, therefore, 8 times multiplied by the earnings, 17.5. Yes, 17.5 million. Yeah. Okay. If you use per share, you get share price. If you use total earnings, you get total equity value. So this answer will actually give me the total equity value. It can be per unit, it can be total. Yeah. So that will give me how much here? 140 million, correct? 140 million. That's the answer. Yeah. All right. That is the current value of debt based on the director's proposal. 140 million. I'm going to put in here now. Okay. The value of debt now, part B1, see, label clearly. 140 million. I use 1,000 here. You can use 1,000, you can use million, that one no problem. 1,000 or million is okay. Okay, 140 million. Okay. All right, done. Okay, first answer. See, label query. Label query. Okay, next, second question. Calculate the weighted average cost of capital of the combined company. Okay, this is the part that many of you don't know how to do. So WACC for combined company. Here. Part B2, see, label query your answer important. Okay. All right. To calculate WACC, there are three general steps I go through now. Yeah. Okay. Very likely you will need to do this in the exam. Okay. Step one is to compute the cost of equity, KE. Okay. The cost of equity, KE. Right. There are different models to find KE. You have learned in your study, dividend model, capital asset pricing model, Modigliani and Miller. Different model. Okay. The question gives you beta. The moment you see beta in the question, you're going to use CAPM. Correct? Right. The moment you see beta, you're going to use CAPM. Yeah? Okay. So that is one exam technique. You see beta is KM, right? Okay, let me see this question here. Okay. Okay, a question from Junwei. Do we need to write the working out or just directly calculate? Okay, now, good question. Must show main working query. Main working will have to be shown. So calculation of WACC will need to be shown. Now, I mark many of your answer. Some of you just put down your spreadsheet WACC 8% without showing working. Now I give you 0 mark because I don't know how you get the answer. It may be just you guess 8% and you hit the answer, right? Working must be shown. ACC have emphasized that many times. Unfortunately, in more answer, we still see no working. You don't have to show two basic working like inflation, 10,000 times 1.1 equals to 11,000. That one no need to show. But main working, right, WACC, this is technical area. All technical working must be shown. Very important. Okay. I hope that answer your question. Working must be shown, right? If you just give final answer without working, we cannot give you mark because we don't know how you get the answer. We don't know whether you understand or you just guess the answer and you just luckily get it right. Okay. Now. Okay. Risk-free. There you go. Here. Combined company WACC all here. Okay. So 3 and 6 here. Yeah. Okay. 3 and 6 here. Okay. Right. Beta for the combined company. Okay. This is where we need to adjust. Okay. Right. Many of you don't know how to do this. So follow here carefully. We got to perform beta adjustment. First, we need to de-gear. We take equity beta of the two company, de-gear first, get the asset beta first, get the business risk first. Yeah. So de-gear equity beta of TED. The first company is TED. The beta formula is given in the formula sheets. Yeah. The beta formula. Formula, there's no need to write down in your answer. If you computer, you want to write this formula will be quite difficult, right? The symbol, formula, no need to write. Okay, formula is given. You get no marks for the formula. No need to write formula. You can just write the answer straight away. Okay. Okay. Equity beta. Everything is here. Equity beta for TED 2.1, yes? 2.1, yeah? All right. Equity beta for TED is 2.1. Okay. Debt beta. Debt beta in your exam, most of the time they don't give you. Most of the time they don't. If they give you, you just take the figure. Most of the time they don't. So we assume the debt is risk-free. Okay. We assume the corporate debt is risk-free. Now, remember in the report, you need to put down assumptions limitation. They mentioned that. Yeah. So you see in the report, I have this. Yeah. This could be unrealistic. A company debt is risky. Only government debt you can say risk-free. Company debt must be risky. Yeah. Okay. Right. So you put that down. Okay. Now, I need the market value equity debt for that company. So we're going to work out the market value. The current market value for that. The current market value. Okay. Right. VE and VD. Make sure you can do all this. Equity market value is the share price multiplied by the number of shares. Okay. Equity market value. Share price multiplied by the number of shares. Yeah. Okay. Share price is, I just move back here. Share price. Okay, can you see here? Share price 50 cent current, 50 cent with 100 million shares in issue. Okay. So 50 cent, 100 million share. Okay. $100 million share, that would be 50 million. Okay. 50 million. Okay. Right. The debt capital, come back here. $300 million irredeemable bond. Okay. Currently value at 92 per 100. See that? Yeah. Okay. So 92 per 100. Yeah. Put down. Okay. 92 per 100. Right. 300 million, correct? 300 million, yeah? That will give me how much, yeah? 276 million, okay? So equity is 50. 276 million debt, 1 minus corporate tax rate. Corporate tax rate is 30%, no, it's 22%, yeah? In the question, corporate tax rate is 22%. Yeah. Okay. So you can see the equity value is very low. It's the current issue of all airline industry. Yeah, a lot of airline is no longer going concern. Okay. So from there you get the asset beta. Yeah. Okay, you get the asset beta. You get 0.395 or 0.4. Rounding is not a problem, okay? You get about 0.4, yeah? Okay, right. So you got asset beta. Now, I think there's a question here. Let's see. Okay. Okay, from Puizu here. Okay, right. To answer Puizi question, there's no need to show formula. Actually, there's no need to show formula. Yes, you put in the formula bar is actually good, but you don't really have to show any formula. That is fine. Okay. If you do it in the spreadsheet, your spreadsheet does show your computation is okay. We can see your answer in your spreadsheet. Yeah. In fact, you are encouraged to use the spreadsheet functionality. I will mention about that in the second session. So yes, if your spreadsheet cell has shown the formula, we can see you have shown your calculation in the cell. We can see the spreadsheet that is perfectly okay. So that one is fine. Okay. But you cannot just key in a figure 8% without showing how you get the 8%. Then cannot. Okay. All right. Okay, so this is asset data for tech, the first company. We also need to de-gear the other company, E-Thunder. We need to de-gear the other company, okay, E-Thunder, to derive at the asset data. This one, I think the question has given us. Okay, because normally you will not be asked to do the same thing 2 times. So the asset beta for E-Thunder is what? Okay, here. Okay. This one is E-Thunder, 0.75, right? E-Thunder, so 0.75, okay? This is the same question, okay. All right, then we combine the asset beta. We combine the asset beta. Okay. 0.4 tech. 0.75 is E-Thunder. Okay. When we combine asset beta, we use weighted average. The weighting factor should be market value. When you combine asset beta, we use weighted average. Weighting factor should be market value. Now, whether it's equity value or the total company value, you must follow the question. Question will tell you. Okay, it says here. Weighted by the market value of equity of each company. Okay. Market value of equity. Okay, the market value of equity that is 50 million, correct? That is 50 million, Okay. Right, what about E-Thunder? Is also given, E-Thunder. Can you see that? E-Thunder, current share price, 120, yes? Okay. E-Thunder, 120 per share, Number of share is what? 10 million share, Okay. 10 million share. So it's 12 million. Okay, 12 million E-Thunder. Right, so 12 million, right? So weighted by the market value of equity, total is 62. 62, right? So that will give me how much share? $47, right? 0.47. Okay. Now, once you got asset beta for combined company, then the next step is you re-gear. You re-gear to the capital structure, okay, of the combined company. Yeah, re-gear to the capital structure of the combined company, which the question say same as that now. That existing capital structure will not change. That's the question. Right. So we take the asset beta, re-gear to find equity beta. Use the same formula. Same formula. Okay. Okay. That beta 0. Okay. Capital structure for the combined company. It says same as that now. Yeah. So we use back the same one as that now. One minus tax rate 22%. No change. It remained the same. Okay. So from there we can now get the answer. 0.47 divide 0.19, you get 2.47. Okay, so after the adjustment, the equity beta for the combined company is 2.47. Okay, very few of you get this answer in the mock exam. So I hope now you are okay. Okay. Chances is you will get this in the exam. Right. Okay, so all this working is just for this figure. Okay. Okay, the weighting factor for the asset beta, this is the market value. Can be equity value, can be company value. You must look at what the question wants. Okay, this is equity value. If they say company value, sometimes they use this word, company value. Using company value. Company value means equity plus debt. Okay, could be either one. Right. Okay, we got the cost of equity. We got the cost of equity. So what is the answer here? $17.82, right? Yes. Yeah. Rather high because airline is a very risky business, especially now. Airline is risky. Okay. Right. Cost of debt. The calculation of cost of debt will depend on the type of debt capital they give you. In your study, you will have learned different types of debt capital: bank loan, redeemable bond, irredeemable bond. When they give you credit rating, risk-free plus the credit risk spread, all that you must have learned. There are different ways to find cost of debt. Okay. So here you are given a simple one. Bank loan. You are given a simple one here. Okay. You are given pre-tax cost of debt of the combined company 8% is given directly, but it's pre-tax. Pre-tax cost of debt of combined company is 8%. Okay, so you are given directly, not bank loan. Okay, you are given directly, so don't need to find. 8%. but this is pre-tax. The cost of that must be after tax. So 1 minus the corporate tax, 22%. Yeah. That will give you 6.24, yes. Okay, it's given already, yeah? So you don't even need to find. Okay. Finally, WACC. Yeah, WACC, that is the formula given, so no need to put down in your answer. Okay. All right. Now, cost of equity, 17.82. 17.82, right? Cost of debt after tax, 6.24, must be after tax, KD must be after tax. And the market value, assuming same as tax now, assuming no change in the capital structure, that's what the question says. So it's what, 50 and 276, correct? 50 and 276, so what is the total? Okay. Of course, this is not logical. So that is one of the limitations you can put into the limitation. We assume it doesn't change. Of course, it's not logical. So that's one of the limitations. Okay. You get 8%, right? Round out to the nearest will do. Okay, done. You get 8%. Okay. All right, 8%, yeah? Okay. WACC 8%, so we got that, the next part, okay? So see, this is the WACC, 8%, yeah? This is the WACC. Okay. So I put the appendix 2, see that? Appendix 2. So you always cross-reference, that is part of your presentation, cross-reference, make your answer clear, okay? Right, so next. Number 2 done already, 7 marks. Number 3. Okay, now we want to evaluate. Calculate the value attributable to TED from acquiring eThunder and the sales of the drone manufacturing business. Okay, now to evaluate a takeover, we use this table here. Yeah. Now, every topic we will normally have a recommended table. Investment appraiser, MPV, we have a format. APV, we have a format. Mergers takeover, we have a format. Yeah. Okay. Right. So every topic we have a standard format that will help you in the exam. See, a lot of the time in the exam, student will tell you, okay, I don't know how to start. I don't know how to start a question. So once you have a standard table, then you know how to start. Accounting, normally you don't have this problem because why? Statement of financial position, fixed format. Income statement, fixed format, right? So you know how to start. So finance, actually, we also have fixed table. If we have fixed table, we know how to start. Yeah. Okay. My student in the class here, you should know all this already. I've given you fixed table for every topic. Yeah. Okay. So the rest of you, I hope you catch this in this class also. Yeah. So if you want to evaluate a takeover, you just use this format. Yeah. Then it becomes easy. Yeah. You have a format here, right? Okay. Now, ready? Okay. The value of E Thunder now, the equity value of E Thunder now, we have just worked out that just now, yes. What is the value? 12 million, yeah? 12 million, okay. So the equity value is 12 million. I put it here now. Okay. All right. What else do I have? Okay. The sales of E Thunder drum manufacturing business. Okay, this one I think we got the figure straight away. Okay, it's here. The sales of E Thunder somewhere here, right? See, another company willing to buy the drum business at a agreed price of 15 million. Remember, you take over E Thunder, you will sell the drum division. You don't combine the whole company, right? You only combine the delivery business. Yeah, so you sell for 15 million. Okay. Okay, 15 million. So I put in here, this one is 15 million, correct? Okay. So this is the value now. Value now normally they give you. Okay. This one they give you. Okay. Before I move on to the answer, I just clarify one point here. Okay. This value that I put down here, you find that I use equity value here. This is equity. This is equity, right? Therefore, this must be equity. It has to be consistent. You can use equity, you can use total. If you use equity, all these three must be equity. If you use company value, equity plus debt, then all these three must be equity plus debt. Is that clear? It can be either one, but as long as you must be consistent, yeah, you will get the same answer, right? Yeah. Okay, let's see, there's something here. Okay, right, from BH, why do we not use only 60% of the asset beta for E Thunder to get the equity beta? Okay, good, you're alert of the issue, yeah. Now, strictly speaking, what you say is correct, but exam sometimes we don't want to complicate too much. So if you look at the question clearly, I've mentioned this. Where is the asset beta just now? Okay, yeah. Can you see here? Specially mentioned, this is the asset beta for the delivery and runner service business. It does not include DOM already. We already specified here. So this is for the 60% already. This is already for the 60%, the delivery business. Yeah. Okay. Right. Yeah. Because we don't want to complicate things there. Okay. Right. Okay, we continue. Okay. Right. So this point, take note, you can use equity or total, but just be consistent. Okay. Now, I want to value this E Thunder delivery business. Question says free cash flow to the firm model. This is the main part now. So the free cash flow to the firm model. Okay, this is the main part now. Now, to work out free cash flow, this format, remember class, use it in your exam. So you know how to start. And also presentation. Okay, use this. 10% growth the first 4 years. Correct? As per the question, 10% growth the first 4 years. Yeah, and after that is 4%. So we must break out into 2 stages. The first 4 years and after 4 years, 2 stages. Okay, let's start. Okay, the E Thunder delivery and runner business. Yeah. Okay. After the takeover. Now, here. Okay. Delivery and runner service account for 60% of its latest revenue and PBIT, which means this one, 60%, yeah, will be the delivery service. 2008 times by 60% is 1680. Now, many students do not take 60%, you take the whole 2008. Okay. See, if you take the whole 2008, what happens? The first figure is wrong, the whole thing is wrong. You will lose almost close to 7 marks. We give you a bit of mark for your working, yeah, but at least 5 marks is gone already just because you missed that 1 point. Yeah, so be extra careful. Okay, right. So 1680 increased 10%. 1680 increased 10% is 1848. Yeah, 1848. Got it? Okay, then increase another 10%, 2033. Okay, times 1.1, increase 10%, times 1.1, 2460. Rounding out is okay. Don't worry about rounding how many decimal or that. We are not particular at professional level. We just want to see whether you can do. Okay, so don't spend too much time how many decimal this and that. Not important at all, right? Okay, PBIT is 22% of revenue that is mentioned in the question. 22% of revenue. Okay. 22%. So how much here? Right. 22%. Yeah. Okay. 1848 times 22%, 407. 2033 times 22%, 447. Yeah. 2236 times 22%, 492. Okay. 2460 times 22%, 541. Yep. 541. Okay. Okay. 22% tax on this profit. Payable in the same year, they say. Could be 1 year later. Here is in the same year. So 407 times 22%, 8990. Yeah. 447 times 22%, 98. Okay. 492 times 22%. And 541 times 22%. 119. Yep. Okay. Capital replacement expenditure. Okay. Capital replacement expenditure. This sentence in green. Yeah, you see this very common. The tax allowable depreciation is expected to be equivalent to the capital investment needed to maintain current operations. Yeah, okay. This sentence means okay, now, if you look at the format I give you to find free cash flow, shall we go back to this part here? Okay, you see this? That's what we use, right? We add back depreciation with less capital replacement. See this one, right? Yeah. Now we must add back depreciation, right? Okay. But suddenly you see it's missing from my answer here. Okay. Now actually it's like this. We must add back depreciation. And we minus capital expenditure for the sales increase for existing business. For existing sales. Yeah? This capital investment, actually there are two parts. For the increase in sales, for the existing sales. Now, okay. this one and this one, according to the question, you must add this, you must minus this, right? Yeah, but according to the question, these two will be same. The tax allowable depreciation equal to the capital investment to maintain existing operation. Since they are the same, you plus minus, they contra off, right? You can ignore. That's why I don't put it down in my answer here. Is that clear? Depreciation, capital to maintain existing sales, these two you can ignore because they are the same. Yeah? Okay. Right. So that left with one more, capital investment for the sales increase. Okay. Capital investment for the sales increase. What does it say here? However, that will need investment of 40 cents for every dollar increase in sales. Yeah, 40 cents for every dollar increase in sales. Okay, this one. Okay. The last one, let me just put down here. Where are we? Okay. This is 40 cents per dollar sales, right? Okay. First here. Now, 1848. Last year is 1680. Okay, so it's 1848 minus last year 1680 times by 40 cents. You get that? Times by 40 cents. You get 67. 67, yeah? I put here. Okay, one. The next one, I take out this. The next one is 2033 minus 1848, the increase in the sales times by 40 cents. Okay, so 2033 minus 1848 times by 40 cents. Yep, that is 74. 74. Okay, I take out. The next one. The next one. 2236 minus 2033 times by 40 cents. Yeah. Okay. 81. 81. Okay. The next one. Okay. The next one. 2460 minus 2236 times by 40 cents. Yep. 90, correct? 90, finish. So we already have the free cash flow to the firm. Yeah, so let's work out the free cash flow to the firm. 250 here, okay. $275 here, yeah. Next one, 303 here. Next one, 332 here, right? Yeah. Okay, I think there's a question here. Let me see. Okay, okay, from Fazal again. Shall we mention in the answer that we ignore that and the cap will not be given? Actually, you don't have to. As long as you don't show, it's okay. Yeah. Okay, you don't have to. Okay. If you show, then it will be wrong. Yeah. Okay, would you like to answer this question live? It's okay. You can make it live, Joanne. Thanks. No problem. Okay. Right. Okay, discount rate 8%. So discount rate 8%. From the present value table, discount rate 8%. 735. Okay, almost finished. Yeah, let's finish off this part. Then I will give you a break. Okay, let's finish off this part. 236. 241. Okay. 244. Yeah. Okay. Okay, but it does not stop here. Business life should be forever. So we have year 5 onwards. Yeah, we have year 5 onwards. Okay. Let's see where can I do it. Okay, the space here. I will do it here. Okay, year 5 onwards. Down a bit. Okay. The value now is the free cash flow to the firm now, 1 plus the growth rate divided by WACC minus the growth rate. The formula we mentioned just now. Okay. All right. A little bit careful on the timing here. Okay. The last figure that I have is this. The last figure, 332. This is actually year 4. Can you see that? This is not time 0. This 332 is year 4. Okay? Therefore, I will need to change this 0 to 4. Okay? I will need to change this 0 to 4. Is that okay? The 332 is year 4. Yeah? So instead of 0, I change it to 4 now. Okay? Right. Let's see. Okay, yeah. Now, okay. Can I? The 332 is year 4. So 332, the growth rate after the 4th year is what? The growth rate after the 4th year is 4%. Okay, 4%. 0.04, 4%. Okay. Right. WACC is 8% minus 4%. Yeah. Okay. Right. So 8632. Okay. 8632. Okay. Oops. Okay, so 8632, I put it here. This is from year 5 onwards. So 8632, and this is the value in year 4. Okay, so I want to discount this year 4 value to now. So I use the year 4 discount rate, 0.735 to get the value now. Yeah. 8632 times by 0.735 is 6345. Okay. Now, student made mistake here. This is not year 5 discount rate. This is year 4 because 8632 is the value in year 4. Be clear here. Yeah. Okay. You add all together, that will be the value now. Okay, you add all this together. Yep. Okay, so the company value now. FCFF give you the company value. Yeah. So what is the value now? 232 plus 236 plus 241 plus 244 plus 6345 7298. Okay, 7298. Yeah. Okay. Okay. Company value now. Now, because I use equity value in my answer, I use equity value, so I need to minus that. Yeah, FCFF is company value, so you must minus that, then we get equity value. Okay, we minus that to get equity value. Yep. Okay, what is the depth of E tunnel? The depth of E tunnel is from the financial position. You can see here 2000. Yeah, this E tunnel, 2000, right? Okay, that's it. So it's 5298, correct? 5298. That, yeah. Okay. Oh, it's just you can here is you just click here. You got so many options. Everyone, that's all. Yeah, just everyone. Okay. All right. Okay, so 5298. So E Thunder, the delivery runner service business after takeover is 5298. So this is 5298. This is just the E Thunder delivery business. It's not the whole combined company that haven't come in yet. Yeah, it's just E Thunder only. Okay. Now that current equity value is 140 million, correct? 140 million, yeah? Because there's no information at all, we assume it's the same. We assume it's still the same because they don't give you any changes, yeah? So we assume it's still the same. So this is what? 145,298. 145,298, correct? Okay. All right, so we can now complete this. This is 100 and 141,200, correct? No, this is 152, wrong. 152. 152, yeah? $8,294, the synergy. The combined company value is greater than the two company add together. That's called synergy, yeah? Because 1 + 1 greater than 2, that's called synergy. So the combined company value is more than the two company add up, so it's synergy. Okay. Finally, the premium of takeover. Premium is the amount that you pay above the current value of the target company. Amount that we pay above the current value of the target company. That's called premium. Okay, so premium is how much? Yeah. Premium of 50% over existing equity value. Yeah. Premium of 50% over existing equity value. Okay. %50 equity value of E Thunder is 12 million. That will be 6 million. That will be 2298 net gain. Finish. Yeah. All right. Okay, we've done the computation part. We need to complete the report now. Okay. We have go on for 2 hours. Okay. After 2 hours, I think your absorption will have reduced. So we have a break here. Okay. Now, so we have a break of say 15 minutes. So you can go to toilet, make a cup of coffee and all that. Yeah. Okay. In the meantime, you can go through the answer. Any question you can put down in the chat room. I will answer later on. Yeah. So we have a 15 minutes break. Okay. We come back, we'll finish off the report. Then we will talk about the changes in the September exam. Okay. So shall we be back at 11:15 sharp? I will start. Okay. Right. You can go through the answer. Any question, just put down in the chat room. I will answer when we come back. Yeah. So I see you in a short while. Okay. Right. Good. Yeah. Okay. I'm sure you already have your refreshment. Okay. So let's continue here. We have another 1 hour or so. Yeah. Right. So let's continue here. Okay. Right. It's good to see all of you stay on till now. Okay. Right, because sometimes free session, people can just come in and off, but it's good to see that you are all very committed students. Okay, now, all right, so we continue here. Okay, we have done the computation part, so we just got to finish off the report now. Okay, number 4, okay. Evaluate the takeover of eThunder. Evaluate. Let me check everything proper. Okay. Okay, reading proper. Assumption limitation. Justification of the valuation basis of current debt value by the director. These are the 3 things you must answer. Yeah. Okay. Make sure you identify all the parts asked in the question and you answer all the parts. If you just answer part 1 and part 2 and you don't answer part 3, no matter how good is your answer, you will not get 8 marks. So marks are allocated for each part. So it's important when you get the question, you must identify all the parts. Highlight it. Use the highlighter in the computer. You highlight, you will not forget. Okay. Right. So first we evaluate. Okay. First we evaluate. Okay. Remember we say must have subheading. Yeah. Okay. The takeover of eThunder resulted in a net gain of 2298,000. Yeah. So 2.298 million. 2.298 million. Yeah, it could have rounding error. That's perfectly okay. Yeah, you don't need to have 2 students having exactly the same answer. No, it could be rounding error. Okay. Therefore, is financially viable to tap. Okay. But don't stop at 1 sentence. I see some of you stop at 1 sentence. Skill level is okay, not professional level. You must make some comment, some reservation to your answer. Okay, make some comment. So although the gain can be considered small in comparison to value of debt, it could help to boost the future prospect. If you look at the gain 2 million, what is debt value now? 140 million. So what is 2 million out of 140 million? It's nothing. But don't forget, that is airline industry. Airline company is now in serious trouble. So you diversify to a new business. Okay, that is a strategic move. It helps you. Now, so although the gain is small, okay, now it can boost the future prospect as the aviation industry has been very much negatively affected by COVID-19 current issue. See, you bring current issue into your answer, you earn good marks. We marker want to see that. Okay. Already we are seeing increased demand in tech company share, causing a rise of the share price by 30%. Remember the question mentioned this? Put into your answer, quoting information from the scenario. Quote info from question, very important. Okay, the question is 2 pages. You cannot have an answer that you don't use the information in the question at all. You must quote, right? Okay. So if you got something like this, we give you 2 marks. Yeah. Many students will only have 1 line. The takeover result in net gain, so acceptable. I give you half a mark. That is skill level answer. That is not professional level answer. You need to explain, justify a bit. Okay, then only you get 2 marks. Yeah. Okay. Now they ask you to justify the revaluation of debt. Yeah. Okay. Now this is this question here. If you look at the current value of debt, is only what? 50 million. True? Current value. After we revalue, we end up with 140 million. Am I right? We end up with 140 million. So much of difference. So why don't we use 50 million? Why we use such a high value 140 million? Yeah. Okay. So that one you need to justify. Okay. Now that is very much current issue. Okay. 2020, 2021, COVID-19, airline battery hit. Now countries start to moving out from the pandemic. Therefore, we can start going back to pre-pandemic level. So we should look at the company performance before pandemic. Airline like SIA, very good company. Yeah. So before the pandemic, they are making profit years after year. So the pandemic result in a loss. So we should look at their performance before the pandemic to judge their future value. So it is all explained here. The current low share price of that is largely due to the negative impact of the pandemic on aviation industry last 2 years because of the lockdown and all that. With many countries start to ease their restriction and opening up, there is a good sign that the aviation industry will soon rebound. So therefore, suggestion to revalue that based on pre-pandemic earnings seems reasonable. Okay. Now, but again, in these 2 years, we have all learned this new norm: online meeting, online class. See, I'm in JB, you are in KL, we can still have lessons. So businesses start to realize that a lot of meetings can be done online. You don't have to fly anymore. You don't have to incur air ticket costs. You don't have to incur hotel accommodation costs. So business can save a lot of money. So many businesses have learned that they can effectively conduct meetings online and reduce frequency of business travel to reduce operating costs. So therefore, we would say that it will not go back to pre-pandemic level anymore. But a lot of unnecessary travel will be cut down, replaced by online meeting. So therefore, we say, okay, we use 70%, 80%. See, we don't use the same level. We cut down a bit. So because of that, because of this reason, we cut down. See, we justify. So this is current issue, industry knowledge that I will mention later on when we go to the professional skill. I will mention later on. Okay. Right. Assumption limitation put down. As mentioned by the question, assumption limitation. Okay, finish, right? The detail you can read yourself here. Okay, now we go to the last part. Okay, we go to the last part, C. Okay, this one, I actually don't see any student get the answer right. Okay, this is the part that I believe many students will omit in your study. That's why I purposely put into the mock exam to see whether you can handle this. And to no surprise, student does not have answer. Many students answer this part by explaining Bradshaw's model. You talk about volatility, real, theta, all that, which is not the answer that we want. Okay, so I explain this. Okay, now explain how real options can be used to price startup business in risky venture like e-tech company. E-tech company are risky business. This is clearly defined as one section in your syllabus, but I always realize very few students have knowledge of this. That's why I purposely put in the mock exam and I want to explain in the debrief. Okay, now continue. Okay, right. Okay, the detail point I put here, let me explain here. Okay, now to understand this real option valuation, first, let's understand this call share option. What is call share option? Share option is the option that gives you the right to buy the share. Let me put it down. It's the option that gives the right to buy share at a specific time in the future at a given exercise price. Okay, call option is the option that gives you the right to buy at the given fixed exercise price. By now, you should know option, we have call and put. Call is the right to buy, put is the right to sell. Call and put. Okay, now let's look at this example. Okay. Suppose I have a call option. Exercise price is $100. That means you have the right to buy the share at $100. Okay. The current market share price is $120. Okay. You have the right to buy call. You have the right to buy at $100. If the market price now is 120, it will be good to you. You can buy at 100. Market price is 120. So you will exercise. Correct? You will exercise. Yeah. Therefore, your call option value is what? 120 minus 100 is $20. It's the share price minus the exercise price. I think that one easy. You exercise this option, you gain $20, but the share price now is more than what you pay. I think easy. Okay, let's take this as the first scenario. The second scenario, exercise price is $100. Yeah. Suppose the share price now is $80. Okay. You must pay $100 to buy the share, but the share price now is only 80. So why should you pay 100 to buy the share? No, right? So you will not exercise. So in this case, the option have no value. Understand? Okay, that one you should have learned in your study. Okay, basic. Okay, now, if we now look at a high-risk startup, high-risk startup in IT technology firm, okay? Not necessarily IT, basically any firm with high risk, just that your syllabus define this technology firm, okay? Now, the first scenario, okay. Let's say this company has debt 100 million, okay? This company has debt 100 million, yeah? Okay, the company value now is 120 million. Now, it's high risk startup. If the business is successful, you go on, very good. But if the business is not successful, it will go into liquidation. It will wind up because new startup technology is very risky. If your technology don't work, it will close down, right? Okay. In the event of liquidation, if the new business is not successful and you need to close down, liquidation, okay. You sell off all the company asset, you get 120 million. This 120 million, you start to distribute to the investor. First, you must pay the debt holder, right? So 120, you pay the debt holder 100. How much is left to the shareholder? Shareholders is equity, yeah? Equity value, okay? So how much is left for the shareholder? 20 million, correct? Yeah, I close down the company, I sell off all the asset, I got 120 million. I must pay 100 million to the debt holder. Balance to the shareholder is 20. In any liquidation, you must pay the debt holder first. Balance of the money go to the shareholder. Yeah? Okay, if we look at the second scenario, I have debt 100 million. If the project is not successful, I close the company, I sell for 80 million. This 80 million I use to pay the debt holder. Not enough, not enough. But because company have limited liability, they actually cannot do anything. Not enough, too bad. They cannot get back all the money. Company have limited liability. How much left to the shareholder? Nothing. Nothing. Okay. Can you see this? Can you see they are the same value? That is what we are trying to say here. Yeah. Okay. We can value company using real option. For high risk company, in the event of liquidation, this is the keyword. In the event of liquidation, the value of the company equity is the same as the value of the call option. See, the value of the company equity is the same as the value of the call option, and the debt value is the exercise price for the call option. Can you see here? 100, 100. The debt value equals to the exercise price of the call option. You understand this? So this is what we want you to know. Okay, so now we go back here. So from this example, then the notes should become clearer now. From this example, okay, come back here. Okay. So first, the answer explain what is share option. Yeah, it explain share option. Okay. The answer start with explaining share option. When a firm is liquidated, this is the key word. Okay. The shareholders will receive distribution only after all the outstanding debt is settled. If asset realized 10 million, outstanding debt 7 million, shareholder receive 3 million. If outstanding debt is greater than the asset value realized, shareholder receive nothing. So I basically explain this point. See, I explain this point in words. Yeah. Okay. As such, key point, the equity value of a firm in risk of liquidation is equivalent to the value of a call option on share with exercise price equals the outstanding debt value. Okay. And because the question talk about new startup in technology, you must of course mention that in your answer. Okay. So this is the key point. So many of you in your answer, you explain Bradshaw's model, the theta, the volatility, gamma, all that. No, that is not what we want. Yeah. Okay. In fact, you don't need to know gamma, beta, theta, real, all that. You don't need to know that anymore. Actually, I'm surprised you put that in your answer. Actually, that one you don't have to know anymore. Okay. Okay, finish. Yeah. Right. That complete our debrief on this mock exam. Okay. That complete this debrief. Yeah. Right. So now I want to move into the second session. Okay. If you have any question on this, you can still put it down. Okay. The second session is to update you all on the changes from September 2022 onwards. Yeah. Okay. Now, right. Okay, this one will be fine. Yeah. Okay. Okay, I will minimize this first. Okay. Now, okay. The changes only apply from September 2022. So you are going for June exam, you don't care about all this. It's only from September. I stress that. Yeah. Okay. Now. Okay. All these resource here I take from the ACCA Education Hub. Yeah. Okay. All right. What are the changes? Okay. Okay. I tell you first. I show you this. Okay. I don't show this first. I show you from here first. Okay. I will send all this handout to you. Okay. These are all from ACCA Education Hub. Okay. I will send that to you after the class. Professional skills in strategic professional options. Okay. Right. From September 2022, one section question A worth 50 marks, two section B question worth 25 marks each. That one is still the same, no different. Each strategic professional options, you will have 80 technical marks and 20 professional marks. Yeah, 80 technical marks and 20 professional marks. The professional marks will be split in the exam, 10 marks in section A. Now section A is 4 marks, correct? Section A from September onwards will become 10 marks and 5 professional skill marks available in each section B question. Now section B, there's no professional marks. So September onward, yes. So 10 plus 5 plus 5 is 20 marks. Yeah, so technical marks is only 80. Now, if you ask me, is the exam getting more difficult or getting easier? Okay, I believe it's getting easier because technical knowledge only account for 80 marks. Yeah, but you must know what you need to do for professional marks. Like now 4 marks, if you don't know what to do, you lose all the 4 marks, then it's not easy for you. Yeah, you must know what to do. Then it is going to be easy if you know what to do. Yeah. Okay. All right. So first point. Okay. Next. I will send this to you. I just highlight the main part. Okay. There are 4 key professional skills that will be tested: communication, analysis and evaluation, skepticism and judgment, commercial acumen. Okay, now I show you the pilot paper. Okay, I show you the pilot paper, which I will send to you also. Where's the pilot paper? Okay. All right. You can see this in ACCA Global website already. Okay. All this, you have taken the mock exam, you should be familiar. All this screen, you should be familiar. Okay, like something like this. And then you see the requirement. Okay. Now, can you see that? Can you see that? Different from what they say now, right now? 10 marks. Question 1, it will state like that. Question 2. Okay, this is question 1. Okay, question 2. Question 2. Okay, this is question 2. Okay. Yeah. That you will say that. See? 5 marks, yeah? Question 3. Question 3. This is still question 2. Okay, this is the third question. You will say that, see? So total 20 marks, yeah? Like that. There's no change in the syllabus. Syllabus is exactly the same. No new thing added, no old thing withdrawn. Syllabus is exactly the same, just change in the professional skill. Okay, now come back to here. Right. What is this 4 skill that is tested and what you need to do to earn the 20 marks that I'm going to explain now? You follow carefully. Yeah. Okay. 20 marks can actually judge whether you pass or fail. So you follow very carefully, please. Okay. Now, right. It mentioned here, I just very briefly go through this first. Yeah. It mentioned here, communication, inform, persuade, clarify, simplify. In summary, this means candidates have to express themselves clearly and convincingly through the appropriate medium while being sensitive to the needs of the intended audience. Your audience is your board of directors. Your board of directors. Yeah? This means responding in professional manner and adhering to any specific instruction made. Whatever instruction given in the question, what they want you to do, you must answer clearly. Okay, right. This is what it says. Of course, by reading this, you don't really know what to do. We'll go to the detail later. Just run through this first. Skepticism. Explore, question, challenge, and critically assess. In summary, this means candidates have to explore, question, and challenge information and views presented to them, identifying if all information is available or whether there will be underlying bias to fully understand business issues and establish facts objectively based on ethical and professional value. Okay, you read like this, very difficult to know what they want. I will show you later. Analysis and evaluation. Investigate, consider, assess, and apply, appraise. In summary, this means candidates firstly have to thoroughly investigate and research information from a variety of sources and logically process it with a view to prioritizing activities and arriving at appropriate conclusion and recommendation. Simply means all questions will give you a case like just now. You need to understand all the information in the case, use it, analyze it. Yeah. Okay. This analysis should form part of a comprehensive evaluation of a matter where the candidates have to carefully assess situations, proposals, and arguments in a balanced and cogent way, using professional and ethical judgment to predict future outcomes and consequences as a basis of sound decision. Well, you read like this, you get very worried. What do I need to do? Don't worry. Later on, I tell you. Commercial acumen, demonstrate awareness, recognize key issue and use judgment, show insight. In summary, this means candidates have to show awareness of the wider business environment and the external factors affecting the business and use commercial sound judgment and insight to resolve the issue, explore opportunity, and offer valid advice and realistic recommendation. Okay, you need to be aware of the wider business environment. You must know the industry. Like my mock exam is about airline industry. You must think about airline. It's about delivery service. You must think about Food Panda, Grab. Then you know the business environment. Yeah? Current issue. You must be aware of current issue. Question will not ask you directly current issue, but you apply in your answer. COVID-19, I apply in my report. Ukraine war, how does it affect us? Ukraine war, oil price increase. If you get a question on transportation company, if you get a question scenario is transportation company, delivery business, oil price has increased a lot because of Ukraine war. You bring that to your answer, current issue. US-China trade war, import tariff. If you get a question on foreign direct investment, you go to a different country. Yeah, US-China trade war will affect you. Exchange rate, yeah, import tariff, protectionism policy, protectionism. Yes, all this will affect your foreign direct investment. See, current issue. Yeah, COVID-19, Ukraine war. Okay, US-China trade war. Read press, read news for all this. US-China trade war. Yeah. Okay. I tell my student, I tell you all now, every day you all go to Facebook. I know. Yeah. Okay. Don't go to Facebook. Go to press. Go to CNN. Go to CNBC. Go to China News Asia. Yeah. Read about COVID, read about Ukraine war, read about US-China trade war. It helps you. Yeah? This is all current knowledge. Okay? It helps you in your answer. Yeah? Okay. Now I'm going to go into the detail. Right. I'm going to go into the detail. Okay. Now. The professional skills marks in the strategic professional options examination will be attached to the overall question rather than individual requirement. So they will not reward you the mark based on specific section. They will not ask you, B part 3, explain what professional skill you can apply to this scenario. No such thing. It will be like the pilot paper just now. They won't mention. You apply overall in the answer. I will show you in a short while. The professional marks is overall in your answer. It's not a specific session. They won't ask you a specific session. No. All 4 professional skills will be examined in section A. Section A, all the 4 skills. Okay. Section B will be 3 skills. All right. So section B, you don't have communication skill. Why? In a short while, I come to that. The communication skill is the report writing. So section A is all the 4 skills, which include report writing. That is communication. Communication, yeah? So section B, you don't have to do report, right? So the communication skill is not there, okay? So that is the difference. Section A include report, section B, no, yeah? Okay, right. Okay. This combination will be dependent on the question asked and the marks will not necessarily be split evenly, okay? There will be slightly more marks available than the set amount for the students to score. For example, section B question, there will be 5 professional skill marks. However, those 5 marks could be scored from a possible 7 marks. That means the professional skill mark will be more than what they allocate. So section B question, 5 marks, professional skill mark. There will be maybe available up to 8 marks that you can earn. So if you earn 6 marks, you already get the maximum 5 marks. The mark allocator is more than the maximum. So you get the 5, you get full mark already. Okay? Now, right. Okay. Okay. Time management, this is important now. Candidates should allocate time based on technical marks available. as professional skill marks should not be thought of as a separate requirement. Okay, now like this. June exam. 1 mark is 1.8 minutes. This is what we always tell students. I'm sure your lecturer will tell you that, okay? Timing is very important for AFM exam, yeah? Let me put it this way. Most students will find it difficult to complete the whole exam thoroughly in the 3 hours. You will be very busy until the last minute of the exam. This paper is time consuming. If you are very free in the exam, you know you fail. You should be very busy until the last minute. If you are very free, you know you fail already. Okay? Now, so 1 mark, 1.8 minutes. Why? Because 100 marks. 100 marks is 180 minutes, 3 hours, correct? 3 hours, 50 minutes, but we take it, yeah? Okay. When you come to September exam onwards, you have 80 marks. Yeah. Okay. You have 80 marks for 180 minutes. That means what? 1 mark, yeah, should take you 180 divide 80, 2.25 minutes. That is how you plan your time. More time. See? So actually, to me, it actually gets easier as long as you know what to do. Yeah? So more time. So take note of this class. Okay? From September exam onward, 1 mark should be 2.25 minutes. Yeah? So the time allocation. Okay? Okay. Right? What to do if you are stuck during answering the question? Okay, this is not something easy to answer. What to do if you are stuck? Okay, a general guide I can give is like this. Okay, sometimes when you do a question, okay, you do part A, part B1, part B2, then part B3, you start, you don't know what to do already. Okay, now, of course, you spend 1 or 2 minutes try to think about how to do. Yeah. Now, if you cannot literally after 1 or 2 minutes, you ignore that, you go to the next part. You don't keep wasting time on one part. You go to the next part. Yeah. After you finish the question, you come back again. When you come back again, sometimes it will have new light. If you keep sitting down there, think about the same problem, you will never come to a solution. You move away, do other questions. When you finish, you come back, look at it a second time, you will have a new thought normally. So don't waste too much time. Yeah, just ignore it, go other question, later on come back. Okay, that's one advice I can give you. Number 2, say you are stuck at part B2, then you go to part B3. Yeah, now, but your part B3 answer need part B2. For example, the question just now, part B2 is calculate WACC. So part B3, when you do your free cash flow model, you must use WACC, but you don't know how to get that. Look at assumption. Assume WACC is 10% from part B2 and you do your answer. We will still give you mark for part 3. You won't get mark for part B2, but you will still get mark for part B3 by just putting an assumption WACC is 10%. Don't ignore part B3 also. Okay? Yeah? So part B2 need to calculate WACC, but you cannot get the answer. Part B3, free cash flow model, you must use WACC. Just assume a certain figure and carry on. You will still get full mark for part B3. Understand? Okay, yeah. So I hope that answer your question, yeah, to a certain extent. Okay. All right, let's come back to here. Okay. Okay, I come back to here later. Let me finish this first. Let me finish this one. Okay. Yeah. Right. So time management. Okay. Next. All right. So now we talk about individual skill required. Okay, I will send you all this. You can also see other paper. I send you all this. Okay, we're going to talk about individual skills required now. Okay. All right. Let me take some of these questions first. Let's see. Okay. Okay. Let me quickly take this question first. Okay. Right. From Hui Ying. Is it advisable to do calculation part first, only go back to the theory part? Okay, it depends. It depends. Right. Question A, question 1, part A is general theory. That one you know, you just answer straight away. But that one is easy mark to earn. Okay. Question 1, part B, the report will depend on the calculation. So when the theory need to depend on the calculation, you must do the calculation first. Otherwise, you cannot write your answer. So it depends. I will not say you will definitely do calculation first. No, it depends. If the theory is easy, you answer first. If the theory must depend on calculation, then you will have to do calculation first. Yeah. Okay. Right. From Junwei here, for the report, is it necessary to include a conclusion? And for the calculation, is it okay for us to use short term? Okay. Is it necessary to include a conclusion? Will be good. Will be good to have a conclusion. Yeah. So I would say yes, you should have a conclusion. Yeah. Okay. Can you use short form WACC? Perfectly okay. Standard short form, no problem. WACC, we all know. KE, we all know. KD, we all know. These are standard short form. CAPM, capital asset pricing model, we all know. You can go ahead and use. So standard short form that widely used in the subject, no problem. But don't go exaggerate. So you NPV is okay, net present value, NPV, we all know. But don't start using DM, dividend model. Who knows what is DM? So then it becomes too exaggerate. The standard one that you see in textbook, go ahead and use, no problem. As long as marker can understand, it will be fine. Don't use OG for organic growth. What is OG? But TV set a brand, OG, OG organic growth. Who knows what is that? So that one cannot, right? Okay, all right, let's get. So we are at this communication skill just now. Okay. So all this I mentioned just now. Okay, the spreadsheets functionality. This is why I want to briefly brief you here. Okay, very fast. The spreadsheet functionality. Okay, if I minimize this here. I just open up this Excel. Okay, most of you already know. Okay, but just in case. Okay, now suppose I just put in brief figure here, 0, 1, 2, 3, 4 years. And I put here the net cash flow. Okay, this is minus 1,000 capital. This is 200, this is 300, this is 800, and let's say this is 450. Yeah, and I have discount factor of say 10%, so 0.1, 10%. And I want to find MPV. What most of you do is, of course, you use a calculator to calculate. For June exam, you can still use calculator to calculate, no problem. For September exam, you get marks for the functionality. Yeah, so to find MPV, you got to do this. Okay. Right, you got to do this. Now, equal equal MPV, right? Equal MPV, open bracket. You put down the rate. See, they actually guide you here. You put down the rate. The rate is this. Okay, the rate is 10%. Yeah. Then comma. Okay. Now it's from this style, year 1. right, from this cell until, so colon, until year 4. So it's all this. Okay. That is year 1 to year 4. Then you will have to add the capital in year 0. Now make sure you have a negative sign for the outflow, bracket or negative. That will give you the MPV. Okay, that will give you the MPV. Right. D5 again, equals to MPV. Okay, open bracket, the discount rate, comma, okay, the value from here, colon, to here, okay, close bracket, Then you got to plus the capital, make sure the capital has a negative sign, that's the answer. See, so you click on this, you see that. You may want to take a snapshot now of this, so you know the formula. Okay, we want to take a quick snapshot of this now. Okay, that is MPV. Make sure the capital has a negative sign or bracket. Okay, IRR. But anyway, you go in Google, you can see this easily. Equal IRR. Okay, right. Equal IRR, open bracket. IRR is easier. You just start from the first one, year 0, colon, to the last one, close bracket. That's all. You get the answer. See, you don't calculate anymore. From September exam onward, you must use this. From June exam, I am being told that the function is already available in June exam. So you go and see in your exam paper. If you see the function in your spreadsheet, you use. If no, then you calculate manually. If it's already there, you use. It will save a lot of time. September onward, this is a must. Okay, the spreadsheet functionality. Okay, all right, let's come back here. Okay, analysis and evaluation. Now, if I go back to my answer here, in all your AFM exam, they give you scenario. You must do a lot of computation. You must calculate MPV. You must calculate free cash flow model, all that, right? That is analysis. Evaluation, you must make decision. That is evaluation. So analysis and evaluation is really nothing new. It's what you have been doing all this while. If I come back to here, see. This is analysis and evaluation. This is part of the professional skill mark. That's why they say professional skill mark is not a separate mark. It's part and parcel of your full answer. So when you allocate timing, you just follow the technical marks. That's what I say just now. Okay. Analysis and evaluation. So all this here is analysis. See, with proper figure analysis, all this is part and parcel of your answer. So if you do it properly, nicely presented, you get the professional skill mark. Okay, that's analysis and evaluation. Some more. Okay. Come to a suitable conclusion. You must have a conclusion. You don't advise your director, you give all the information at the end, you don't tell him what to do. He employed you to advise him what to do. So you must have a conclusion. Whether you should take over the company, yes or no, you must have a conclusion. Don't leave your decision hanging. Okay, you must come to a conclusion. Now, your report should only contain necessary information that the directors want to know, what he don't know and he want to know. Don't put too basic general information about the company. See, you are reporting to the board of directors. If you are reporting to, say, Genting Malaysia Berhad, the directors of Genting know Genting better than you. So you don't go and tell them Genting has how many employees, when was Genting formed. You don't give all those background information in your report. Yeah, like for this question, okay, for this question here, we start off with some background information, right? You don't go and put down in your report, this company is formed in 1990, that the CEO bought the company for $2. He know better than you. You don't have to tell him that. Yeah? So no need to put down background information in your report. Just put new information, technical information. Understand? Background information we don't want. Yeah? Okay. Now, because he know that better than you. Yeah? Okay. Right. Okay, now, skepticism, the next professional skill. Skepticism, okay? This is your assumptions and limitation. In all your answer, you must have these assumptions and limitation. Okay, so this one. See, this is skepticism. Okay, we assume profit margin remain at 22%. That is, of course, not logical. Skepticism. You query this assumption limitation. Your answer must have this. Okay. Okay. So this one. Okay. Now, commercial acumen. Okay, commercial acumen, all AFM question will be set in a commercial scenario. They give you an airline, they give you an e-business, they give you a hotel, they give you a hospital. All this has come out in the past. Each question is one scenario. You must know the industry and do your answer based on the industry knowledge and current issue. So this is where, okay, the industry knowledge will come in. The industry knowledge and the current issue. Okay, now like what we do here, where is our commercial acumen here? Okay. This one is commercial acumen. See, COVID-19, how it affect your industry. So you must know COVID-19 current issue, how it affect airline, the industry. You put down. Yeah. Okay. Right. This one, commercial acumen. See. Okay. So that is the professional skills that we are talking about here. Okay. So later I will send all this to you. So commercial acumen means what? You must know the industry, you must know current issue. Okay, skepticism, assumption, limitation. Analysis, evaluation. Okay, give your decision, give your conclusion, analyze the data, use table and all that. Yeah. Okay. Communication, the report format, use spreadsheet functionality. That's all you need to do. You got the 20 marks. Okay. Now, right. Having said that, all this done. Okay. Finally, the last one that I want to tell you is the Bradshaw's model. Okay. I think I can close this one first. Okay, the Bradshaw's model is the next one I want to tell you. I want to go back to that education hub just now. Okay, just 1 minute. Very fast, I just want to show you this one. Okay. Okay, just a few more minutes. I just want to finish off this one important one here. Okay. The BSOP calculator, this one. Okay. For the June exam, you must know the Bradshaw's formula. You know that D1, D2, ND1, ND2, all that you must calculate. Yeah. From September exam onwards, you don't have to do the calculation. They will give you in the form of a spreadsheet. Okay, I'm going to play this video to you, few minutes only. You watch this video, yeah? Okay, then you will know what it is. Okay, let me know, is it clear? You can hear?
This short video explains a change in the Advanced Financial Management exam, which will take effect from September 2022. It will no longer be required for the full calculations from the Black-Scholes option pricing model to be performed manually. Instead, in a question where the calculations are required, an additional answer option called BSOP calculator will be provided. The main reason behind the change is to better reflect a workplace where you would be unlikely to need to build these calculations entirely from scratch. It is also recognized that doing these calculations in a spreadsheet under exam pressure is quite difficult, so the decision has been made to provide this calculator. As you can see, most of this spreadsheet is locked, and you are not able to enter any information into the cells. The only cells which are not locked are these cells for the input variables. These are the cells in which you will enter values for the variables using information from the scenario. The inputs for the asset value and the exercise price can be entered as full values in thousands or millions. This may depend on personal preference or how the information is presented in the question. Here, I will input the figures from this question in millions. The risk-free rate should be entered as a decimal. The time period should be in years, and the volatility figure as a decimal. The 6 output values given are consistent with what can be seen.
Okay, now, so what you do is, if the question tests you on Black-Scholes model, they will give you this BSOP calculator. You click on it, you enter these 5 variables, these 5 determinants: asset price, exercise price, risk-free rate, time, the standard deviation. Yeah? You just enter here. Okay, now 2 things to take note. The rate must be in decimal. If 10% is 0.1. The time must be in year. If it is 6 months, is 0.5. 6 months is 0.5. Okay. After you enter all these 5, all these figures will come out straight away. See, D1, D2, ND1, ND2, core value, book value. They won't give you the normal distribution table anymore. They will give you the value straight away. So it becomes very fast. September, June, you must still know all the formula. Don't say you don't learn the formula now. June, you must still know the formula. Okay.
Seen in online Black-Scholes option pricing model calculators. But to fully address the requirement, you will want to know the figure in row 9 or 10. The values for both a call option and a put option are given. Based on your understanding of the question scenario, you should identify whether the option being considered is a call or a put option. It may be a good idea to do this in the word processing answer space. If relevant to the question, as in this example, it is also a good idea to use the word processing answer space to explain where the asset value figure has come from. The BSOP calculator answer space will be sent for marking, so you do not need to copy the outputs into any other answer space.
Okay, there's no need to copy your BSOP spreadsheet into your answer. It says that because the marker can see your BSOP calculator. No need to copy that in your answer. Okay.
Although it will remain possible for you to do the full Black-Scholes calculations in the other spreadsheet answer space, please do not do this, as it will use up valuable time and there won't be any marks available for the calculations. Marks will only be available for correctly identifying the input variables and for recognizing which of the call and put values is relevant for the situation. The BSOP calculator will only be provided in questions where it will be needed, not in every question. So if the calculator is provided to you in the exam, you will know that it should be used. So if you are taking an advanced financial management exam in or after the September 2022 session, please ensure that you are familiar with the BSOP calculator and how you should use it in the exam.
Okay, that will be fine. Huh? All right. Okay. Now, so that will be coming to the end of our this debrief session. I got no time for the currency risk already. Yeah. Just allow me 1 minute for a bit of commercial before we end the session. And if any Q&A, we can tackle the Q&A. Yeah. Okay. Right. For the coming July intake, we will run hybrid course. So we have face-to-face class in Johor Bahru, and we have Zoom live session. Okay. So if you are keen to know more about our courses, you can see our address, website information all here. You can ask us on all this. You can contact us. Okay. My boss has just approved one thing. Our deadline, early bird deadline is May 31st. But for those who are in this session today, we give you specialty. We extend the early bird discount deadline until June 12th. Okay. Now, all you need is when you register, you just tell the counselor that you attend our ACCA debrief session. As long as you can show some proof of email that ACCA sent you the Zoom link or you have registered, right? Just some email proof, they will give you this early bird discount. Early bird discount. It will be open to you all, just this class only up to June 12th. Okay? Right. Okay. Oh, cannot hear now. Okay. Right. I think that's about what I want to give you all here. So hope you all have benefit from this session here. Okay. Right. Is there any more last minute question? Last few questions before I pass it back to Joanne? Any question? Okay. If no, right. Joanne, you want to take over, or we can just off here?
No, I'll just have a quick closing here.
Okay, yeah.
Yeah, thank you, Chow, for the informative and insightful sharing of your expertise in this paper. We really, truly appreciate you, supporting our students in preparing for their June exam. Now, to our students, we hope you are able to grasp the exam techniques and also the tips taught from Chow. So rest assured, we will email you the video recording link, including today's written notes from Chow, so you can refer to it again. All right. So please be on the lookout of the email from us next Monday. So again, all the best and also good luck in your exams. Enjoy the rest of your day and happy weekend, everyone. Bye-bye.
Okay. Good luck to everyone. I will send you the note shortly, Joanne.
No problem.
Okay. Thank you.
Bye-bye.
Bye-bye.
Everyone.
Good luck to everybody.
Yeah.